And we're live again, Alex.
Well, hello, Vitas. Nice to see you again.
How are you?
I am very good, thank you. Very good. Very excited for this talk today. Hopefully, we're gonna, shed light on some things that a lot of people, I think, are wondering. So I'm really happy that we're here doing this video.
Absolutely, it's a fascinating topic. We opened it earlier on in the week in my newsletter. Actually, on Tuesday, I wrote about something is fishy about this Corona crisis, and it's not something. Actually, we both agree, and together with us, a lot of people agree that it is kind of strange how everything comes together, and it's not to point fingers or discover, let's say, hidden links, because we don't know. Let's be honest, we don't know, and no one will know for sure. I think actually no one on the whole planet knows the complete story, because of course everything interacts and starts reacting on top of other things. So it's impossible to know everything. But when the newsletter was about, there's something strange, and as we all know, we always get a lot of questions. Also, as we all know, we saw never in the history of mankind, Alex, I think you will agree, and you know better than me, but a bigger crash than we had in March. But no one was paying attention.
Mm-hmm.
It was not even major news. Of course, there was the crash, and it was news. But it's not like this is the biggest crash in history of mankind on the stock markets all over the world. So that is actually already something strange. Strange. That is something bigger was happening. It's of course the pandemic that was just taking place and was spreading at I think at the peak. Italy was severely down the road. China was all over the news. It was starting to spread to the US already. It was just before it really hit the US. When we go back a few months earlier, back to September of 2019, we saw the first small notes, messages in the news that like what they call the shadow banking system. It's like the lending of money between the banks itself. So providing overnight liquidity for banks in order to transact whatever their transactions are put in throughout the day. So overnight, all those transactions are processed. Actually, even yesterday, I got a call. I wired 5,000 euro to a bank account, and 10 minutes later, I got a call. Is it true that you wired 5,000 euro to a bank account? I said, yes, it's true. Okay, I'm just checking. So they're like on top of all those things, even a wire of 5,000 euro, which is maybe a lot, but also not a lot of money. And I immediately got a call. So banks are short on liquidity, and because it was towards another bank. I never get this call when it's within the same bank. Never. It was to another bank, and immediately they were on the phone for 5,000 euro. So that is already, one of the things, small things you start noticing, that banks are on liquidity are very, very thin and working on a razor small edge. Now with interest rates that are tremendously low, I took out a loan to buy a piece of real estate, Alex, the project you and I are well aware of 1.5 million. And it's 1.5 million loan, and interest rates are like ridiculous on it. 1.0, 1.1. You have to make a profit on an amount on a loan like this, which holds maybe not so much risk, but still on a 15-year term, period.
It's completely ridiculous.
So the liquidity within the banking system is very difficult today, and it already was a year ago. And back then they ran out of money, and overnight, I remember, and I think you remember as well, the Fed had to step in and provide billions and billions. I think it was 250 billion just to save one night.
Yeah.
And then, well, you continue the story from there. Then 2 months later, we saw the first things happening, and what do you think now?
Look, I think before we something that's important to understand here is that, there is the official narrative of everything that we hear in the news. And I'm not saying that everything we hear is wrong. But what I just want to encourage everybody to think about is the fact that whenever you find yourself on the side of the majority, and you know it's time for you to pause and reflect. And I think Mark Twain said that. I think it makes a lot of sense to kind of just start questioning things. And like you were saying, you know, last year we had a liquidity freeze. It just wasn't enough money. The system malfunctioned. Now, I'm not saying that it was a planned thing that then the coronavirus happened, but it was quite well timed in the fact that now the system, it's been an excuse to pump trillions of dollars of liquidity into the system. And so, you know, whether that's related or not, it's really hard to tell. But the fact is that it's happened. You know, there is now so much pumping of money into the system because there's a huge demand for money. And, you know, you experience this problem in euros. But the demand, or the problem is the biggest in dollars. Now, what a lot of people don't understand is that the US dollar is the most in-demand asset in the world. And the market for US treasuries, which is the safest asset in the world, is backed by the United States government. At least that's how the theory goes. It's the safest asset in the world. We'll see about that one. But it's the most in-demand asset in the world. The bond market, so that sells these treasuries, is the most liquid, it's the most traded market in the world. If you thought the stock market was big, just wait until you see the bond market. I mean, you know, when people talk about, just to give an example so that everybody really understands why this is real, when we say Apple has $100 billion in cash, or Warren Buffett has $150 billion in cash, nobody actually has cash. People have bonds. People own short-term treasury bonds because they're much safer than actually owning cash in the bank account. So like no big investor has like 100 million in their bank account, but they own $100 million worth of treasury bonds. So that's really important to know. Why? Because the banks. So let me take a step back. The U.S. dollar is the world's reserve currency, and I'm sure a lot of you guys know that it is used in 75% of the world's transactions, all conducted in U.S. dollars. And that means that there's a lot of loans issued in U.S. dollars. But one of the things we see happening is that a lot of people around the world have U.S. dollar loans to pay, but they don't have enough U.S. dollars. And this is something that happens in these, especially in these kinds of crises, because money is tight. Everybody wants to get their hands on the US dollar. It's this amazing asset because everybody takes out loans in US dollars because it's the world reserve currency. But let's say, for example, that you are, Colombia, and you take out loans in US dollars, but all of a sudden everybody wants the US dollar, so the value of the US dollar goes up. But you have to pay back the US dollar loan with Colombian pesos, because that's what the money that you make, when you sell things, you make Colombian pesos. And so as the value of the US dollar goes up versus to Colombia, it becomes much harder to pay your debts. And this is where a really strong US dollar is really bad for the world economy. Every time the US dollar gets stronger, emerging markets around the world take a whooping. I mean, it becomes so hard for them to pay back the debt. It becomes much harder for them to buy imports from abroad, because when your currency falls in value versus the US dollars, let's say you want to buy, goods from the United States or from anywhere, because that's usually all traded in dollars, it becomes much more expensive. And so the US dollar, there's kind of like nobody really, does the US win, does the US not win? Some people will say yes, some people will not say yes, but the US dollar, the stronger the dollar, the more goods the US can buy from abroad. It's very simple. But when you're on the other side, you lose. And so anyway, so I just wanted to make that clear, and I don't want to make this just a long monologue, but it's very important to understand that the US dollar is the most in-demand asset. So what happens in these kinds of situations is that there is a huge demand for US dollars. When that happens, the value of the US dollar goes up. So it's very likely that we're going to see more and more demand for US dollars over time. And you can already see this in the way currencies are behaving, and they've behaved for some time now, is that the value of US dollars and US dollar assets goes up. Now, what if
I may, Alex, jump in there, I think US dollar is going to go up. I agree completely with you before it goes down. And it can take maybe even like as long as 10 years before it finally comes down. But what I see happening here is that we're actually already at war with each other, but it's a currency war. There's actually a nice book, and it's called Currency Wars as well.
By Jim Rickards, yeah.
Yeah, and actually it's in the book. They're playing a game, and they see what is happening when you are fighting this war. So the book is all about actually what is going to happen now. So if you're interested in it might be a good read as well. But we see a debasement of currency because of the illiquidity that we saw in the system, which is absolutely there. There's no doubt about it. There's a shortage of liquidity in the system just to keep everything afloat. And now with failing companies and failing loans, it's even getting worse. So that is why there's such a huge amount of printing going on. But with the huge amount of printing going on, there's also a debasement of the currency going on, because if you create just more of your own currency, your currency would, by definition, lower in value in regards with other currency that are not allowed to print.
Exactly,
but if you go down, you get on the other hand, a competitive edge, because everyone wants to buy from you. And if you're the US dollar, and there's such a high demand, like you just explained to us, because and it is true, there's a huge amount of dollars already in existence, but the demand for the dollar even dwarfs that demand, or let's say that already amount that is already there. So if you're lowering your currency, then all the others, then it becomes even more competitive for the US to export. So what will happen is other countries, and if the Chinese yen is going up in regards with the dollar, for example, then all the goods coming out of China will be in less demand. Mm-hmm. Because they're not too expensive. And then they will have a problem exporting things. So they're also, first of all, because their banking system, which is also having the same problem. Everyone has the same problems. All the economies are slowing down. Liquidity is getting scarcer by the moment, by the day, actually by the hour, I guess. Mm-hmm. We just in Belgium had a big company fail. And the bank, which I was in the talks for applying for the loan, just said, look, today we lost $80 million on one company. 80 million euro it was on one single company. So we're kind of strengthening the rules. Yeah. But gone like this, and this is just one relatively small company. It's a big company in Belgium, but it's a small company worldwide. You see, so if you take a look at this happening on a global scale all at once, then you see two major things playing out. And I think, Alex, that is something really interesting. Maybe you can explain it. If you have, on the other one hand, you need a lot of liquidity, but there's also, because you're creating a lot of currency, it's not money, because you're creating a lot of currency, then the other one gets a competitive disadvantage because the export for him becomes more difficult because you are becoming cheaper. And then all of this massive money printing starts to derail, and well, I think we can.
Yeah. So this is a really interesting dynamic, and unfortunately, nobody really talks about it. Also, because a lot of people who work in journalism, they don't have a really deep understanding of finance, and that's in a way that's okay because we can do our own research. But what's happening is and what you talk about is a currency war, right? It's the debasement of the currencies. It's a race to the bottom. And if you've ever heard that Trump called China a currency manipulator, what essentially Trump has called China is he's accused them of artificially making their currency cheap, so that buying Chinese goods would be really cheap because everyone loves Chinese goods when they're cheap. And this is a lot of problems. Whenever big exporting countries like Japan, for example, they see their currency rise in value, they don't like it because all of a sudden their goods become too expensive to export. Nobody really wants to buy them. And so China, but everybody else, the European Union, is very engaged in this. I mean, the German manufacturers are raving for a cheaper euro. And this is essentially what this is, a race to the bottom. A race to the bottom is never a good idea because if you hold the currency that is coming to the bottom, which they're all eventually going to do, you're going to see the purchasing power of what you own essentially go into the toilet.
Exactly.
This isn't doom and gloom. This has happened time and time again throughout history. It happens all the time. Is that countries, debase their currency, and it happens once every roughly 70 years. Sorry if you hear some noise. There's somebody fixing something, I think, close by. It happens roughly every 70 years where the whole currency system is reset. And it happens with tons of money printing, debt default. We're going to see a lot of debt defaults as well. It's just started happening now, and they're providing liquidity, but at some point the liquidity is just not going to be worth anything, and you're going to see a cascade of bankruptcies and debasement of currencies. And so you might be wondering, like, well, okay, this sounds pretty bad. What can I do about it, right? And this is where we are trying to bring you this, not to tell you about why you should, be on your guard or you should be scared, because there's nothing to be scared about. This is you have to be prepared, and this is what Beyond Entrepreneurs is all about. We're helping you prepare. We give you the education. We give you the tools. And
exactly. I think if I may jump in there,
of course,
Alex, what you say there really hits the knee. It hits it touches the needle, because what we try to do is indeed not predict, because we don't know. We started out this conversation with saying we don't know. And no one listening or watching right now knows. But what we are capable of today is by preparing. Because let me just go back to the two things, because you said two things, really important ones. So we have the dwindling down of the value of currencies, but we have all fiat currencies. Everyone in the world working around is today living and acting in a fiat currency system, and they're all shit in the end, because they're all going down in value tremendously, and they can be printed, and they're flooding the market with it. So we have first this, we have second the liquidity crisis that is actually present today, and which countries are fighting with the side effect of the inflation of the currency. But then we have us. And that is where Beyond Entrepreneurs comes in, because we don't know what is going to happen, but we do know, and we see the dynamics. And I do not like to call it a game, because I think that's too easy. And the wording is not really fit for what is happening, because for many people it will mean question of a loss of tremendous a loss of buying power of their lifestyle, of the level of living. So it's not a game. But if you try to look at it this way, like, okay, I cannot predict, but I can prepare. So then we're playing a game of fiat currencies, at least on a very high level. They are playing a game with their fiat currency in order to steer their way through the two things we've been talking about. And we have to, stay afloat and try to be on the right side. And that is why the demand for the dollar was so important, Alex. And I think that's what you're just about to say now. And listen carefully, guys, because this is probably difficult to understand. Probably if it's the first time you hear it, you will have to repeat and repeat before you really start to get it. But I'm gonna let you finish there.
So typically what happens in these kinds of scenarios is that we initially see a huge demand for a currency, and so it goes up in value. But the problem is always liquidity. And so what happens is that they print large amounts of currencies, and then ultimately that currency becomes worth nothing. Look, you can go through any moment in history. It happened to countries all the time. I mean, today, Venezuela is probably the best example, but this is I would say a failed socialist state. But there are many examples in history of this happening time and time again to currencies. So something really important that you don't want to do is you don't want to, first of all, make cash a long-term solution. Okay, if you're owning cash for the very long term, that's probably a bad idea, simply because it's not going to hold its value over very long periods of time. We see essentially two ways of owning, of storing value for the really long term. One of them is you can own some gold. Why? Because gold ownership is a way for you to preserve value. Now, gold has preserved value for 5,000 years, and it's likely to continue doing so. Or you can take the other approach and saying, and this is the one we really talk about a lot of Beyond Entrepreneurs, and that is owning real assets that provide income. look, ultimately, whatever currency you own right now is going to be worth nothing at a certain point. But there's going to be other currencies that emerge as a result. Whether the yuan, the Chinese renminbi, yuan, it's the same thing, is going to be the world's next reserve currency, nobody really knows. Is it a contender? Well, we'll see about that. But you know, the euro is probably going to be one of the first major currencies to go down to the toilet. And that I don't mean I live, you know, in the eurozone, and so do you, Vít, and I like where I live, but I know that our currency is essentially doomed, and that's totally okay because I know that, you know, eventually it will create better things. But anyway, so if you hold cash, don't hold cash for the very long term. It just doesn't make sense. But you need to have
don't cash, especially then. Well, for the long term, I completely agree. But if you have to hold cash anyway, then there are still many different other fiat currencies in which you can. Because why are we not scared? Because we just have no euro attached assets that we're holding today.
Exactly.
So
look, if you
strategy there already.
Exactly. Look, if you want to own cash, I own lots of US dollar cash because I know that it's in high demand and it's going to do well. I like to call the US dollar the least dirty shirt in the dirty pile. You know, a lot of people say this. I didn't pull this out of nowhere, but you know, because all the currencies are bad, but the US dollar is like the least bad right now. So if you want to own something, if you want to own some cash. And again, I actually think on the short term, and we talk about this as well, Vít, on the short term right now, with the next year or something, or maybe a bit longer, owning some cash is not going to be a bad idea at all. You just don't want to make it a 50-year plan and be like, I'm going to own cash because I'll be rich. No, you won't. You just be poor because it won't be worth anything. But you know, you can own some cash right now in the short term because something that we see a lot of people doing, unfortunately, is thinking the stock market has gone up. And you might be wondering why the stock market has gone up, because things seem to be doing so bad. Because the central banks are pumping so much money into the system, but that money gets absorbed into the financial system, and it makes, you know, borrowing is encouraged, and there's all this money that goes into things like stocks. So this is just inflated upward. So if you think about it, the whole economy has shut down. We still have no idea whether there's going to be a second wave. There's probably going to be, if you look at what's happening coming out of the US, coming out of Japan, there's probably going to be a second wave. If the stock market keeps coming up, it makes no sense, like none whatsoever. So if you want to be smart about this, you want to think about building a portfolio over time. The best thing you can do is to position yourself to profit when things make sense. Right now, there's a lot of things that don't make any sense, but there are some places that do make sense. And you know, and Vít, in the Gemini Stock Investor that we send out, you know, we talk about opportunities right now. Although things seem to have gone up, there are still certain spots in the world that are really, really interesting, where we can find incredible deals that we're happy to own for very long periods of time. But you have to know where to put your money, and you have to be comfortable not going all out. Something we see a lot happening, and I'll just kind of round this up on that, is that a lot of people are, you know, are thinking, damn, I missed out on the rally, damn, like, Tesla stock is up at, I don't even know what it's up at today, probably like $1,000, and some people are emailing me being like, wow, what happened? And I'm like, I don't know what the hell happened. And to be fair, you don't want to feel like you missed out, because that feeling is just going to make you do an emotional decision, which is probably going all in right now, because what if it keeps going higher? That's a really, really bad way to look at it. Instead, something Vít always talks about, something I encourage as well, is to build a portfolio over time. And if you're looking for a strategy that will help you do this so that you make sure that you earn income for the rest of your life, which is ultimately what's going to provide you with the freedom, that's something that we teach in the masterclass. And this is not really a sales pitch guide, but this is more to tell you, look, we understand that this is valuable, that a lot of you guys need this. So if you feel like you don't know where to start your investing, you don't really know what your strategy should be, you don't really know what your goals should be, check out the masterclass. That's exactly what we designed it for right now, times like these. And if you already have a strategy and you say, you know what, I'm ready to start investing, I understand that right now I need to position myself carefully. I need to not do what everybody else is doing, because like I said at the beginning, if you're doing what everyone else is doing, it's time to pause and reflect and think maybe there's a better way to do it. If that's what you're looking for, then the Gemini Stock Investor is the best thing that we have to offer you guys. Again, we're saying this because it's valuable. We built this because there was demand for it. We built this because our members came to us and said, look, I understand entirely what I'm supposed to do. I understand how I'm supposed to structure my investment. I understand the strategy. I understand how to think about it. What exactly am I supposed to do? And what exactly am I supposed to buy, and when? So maybe you can just kind of tell us a little bit about what we're doing with the Gemini Stock Investor right now.
Exactly.
and how people can take advantage of that.
Well, we're just launching it. So June was the first month we ever came out with. We came with the first issue this month, actually. And so just to launch it, and actually today is the last day, we did a special promotion, a promotion of only $9 a month for 6 months. So it's $54 for 6 months. While as from tomorrow, it will be $49 every month. So it's a subscription model, so it's a monthly issue, and the June issue is still today the sign-up bonus, the sign-up promotion we do. Only 6 months, one time, $54, so $9 a month. If people are trying to, making sense of everything, we talk a lot about how to prepare, how to build up a portfolio. If you are interested and you say, okay, look, I don't know where to start, I have little money maybe, we see it possible as from $100 a month. If you can spend, or if you can invest $100 a month, then this is definitely something you should be taking a look at. Alex, it is finishing tonight and it will not go online anymore tomorrow, or you can, but then at a much higher rate. So correct. I would say, if all these things interest you, become a member, follow us, subscribe to the newsletter, guys. And we're going to do a lot of more talks about it, because we definitely haven't said everything yet, but it's today the day to take action, I would say.
Exactly, and guys, this is really important again. Like, we really encourage you to if you feel like this is the right fit for you, we encourage you to check out our products, but also know that we do a lot of free stuff. We do this, for example, we do a daily Nugget every single day. We write really good newsletters, actually. I think they've become really, really good over time, where we explain to you exactly what's happening, how you can take advantage of it. It's educational, so it's really to guide you. So if you guys are interested in having somebody by your side for the next year and a half, as we go through this crisis, as we understand how you can take advantage of it, how you can not be left behind, just get our newsletter, guys. Sign up on beyondentrepreneurs.com and get our newsletter. It's some of the best work that we do is in the free newsletters. So just check it out, guys, and just follow us on the journey. Just let us be your guide through this next year and a half.
Well, it's all about preparing, not about predicting, because no one can. So it's all about preparing and being able to have a portfolio that weathers all storms, and that is exactly what we will be helping you with. So beautiful message, Alex. I'm going to leave you with it. Enjoy the weekend.
You too. Thank you so much.
We'll talk on Monday.
Sounds good. Bye, everybody.
See you there.
Bye.